Hey guys,
Right.
welcome to another video. And today we've got a really interesting one for you today. We've actually got Vishal Karia, who is the Chief Investment Officer at Ethos. Now, Vishal has actually got quite an interesting background. Vishal's actually been in the traditional finance world for from what seems like most of his career. Just going through some of what Vishal's actually done. Vishal was actually with Blackrock for around about 10 years. Vishal, you started off as a business analyst, and then you were the vice president of iShares Business Intelligence, and then on to a director position in the model portfolio solutions. And you were actually working on target allocation funds. You were working on multi-asset investment strategy development and management, quantitative investment research, and I know that's part of what you're doing here at Ethos, and fund and portfolio analytics for ETFs and mutual funds. So you've got a very interesting background coming from that data research and analytics side, and then moving into cryptocurrencies. And you've come on board with Ethos around 5 months ago as the chief investment officer. So why don't you give us a little bit of your story, how you got into cryptocurrencies, and how that transition from where you were has gone into cryptocurrencies.
Sure. Thanks, Bo. Happy to be here. Let me I will not take too much time, but I'll just describe my story real quick because it'll help understand how I think about things and crypto specifically. So I started my career as a software engineer way back in the year 2000. And I worked as a software engineer for Morgan Stanley and developed a lot of software for them, managed a software development team at one point. And gradually, I grew more interested in investing and transitioned into investment management from software development. So I got the CFA charter, which took me about 3 years of education to get the charter, and then transitioned my way into an investment management career. Uh, and that's what I was doing at BlackRock before I jumped into crypto. And with crypto, it's been interesting. It started with a news article that I read, I think about early 2014, about Bitcoin. I got curious, read the white paper, made a lot of sense to the engineer in my head as well, and the investor. So I'm like, there's something going on here. I'm interested. So I bought my first Bitcoin. I think it was in early 2014, and then kept buying for the next couple of years while Bitcoin kept going down. So my resolve was severely tested as you know, as we went through those couple of years when Bitcoin pretty much sort of went down from the 1,000, 1,200 where it was all the way down to the 200s. But the idea definitely sort of caught my attention, and I started following the space. This is still while I was working at BlackRock as sort of a professional mutual fund manager, and we ran a bunch of model portfolios there as well. Um, so cryptocurrency was taking up a lot of my hobby time, and I realized I just had an interest in it, and I wanted to spend more of my time with cryptocurrencies, and that's when the switch to Ethos came along. I was debating between, working for or starting a crypto hedge fund or some sort of shop which would be much smaller and self-contained, and or working for for a platform like Ethos, and just the idea of working for Ethos appealed to me a lot more as I thought about it, because it just has a much broader impact. It touches a lot more people than I could touch with a hedge fund, or a similar shop, which would be sort of focused on the wealthy. I think just the broader impact, the global impact that Ethos can have, appealed a lot more to me. So that's when I switched over to Ethos and to cryptocurrencies full time. So here I am now, and pretty stoked about it.
Oh, interesting. No, we're glad to have you on board. Now, I have to ask you, BlackRock's been in the news a lot lately. I'd get slaughtered if I didn't talk about that a little bit, because BlackRock is so massive. So much of the world turns to any kind of tidbits of news or information that comes from these major investment firms, because I think a lot of people that have been in crypto for a while kind of know that, we really need that not maybe not endorsement, but we need these bigger companies to get on board. Why don't you tell us a little bit about that, and then the other news article as well about the CFA?
Sure. With Blackrock, they've had they've had a working group, and I think they've been public about this, focused on blockchain and the technology. So the technology is definitely the blockchain technology is definitely something that not just Blackrock but several other large institutions are excited about, are experimenting with. So that definitely is something that goes on. Cryptocurrencies as an asset class, and whether BlackRock is interested in investing in them. I am not aware of any public information around that. So we'll see how that plays out. But what I can state more generally is that, as I read news, press coming from either large institutions or regulators, I can see more and more acceptance. If you were reading news 2 years ago, what you would see was a lot of large institutions would be dismissive of crypto. It's like, okay, the blockchain technology is interesting, but crypto, no. That's just a scam, right? That would be sort of the statement that you would hear very often. You don't hear that part, right? I mean, there might be one-off people who will say that, but a lot of it is, okay, this is interesting, definitely has legs. Let's see what we can do with it. I think, we're still some time away, years away from large institutions actually adopting it, where they start, investing, money publicly into cryptocurrencies. But I can see that that on ramps already getting built, both from large institutions and from regulators. That the interest is there. The CFA Institute that you mentioned, that was actually a huge endorsement. That's a piece of news that came out recently, where the CFA Institute, and I'll just sort of describe the CFA charter real quick. The CFA charter takes about 3 years. It's a self-study curriculum. You have to pass 3 exams, so you're basically giving up 3 years of your life if you want to get that charter. I am a CFA charter holder myself, so I've suffered the pain. I know how hard it is. So it happens to be the most sort of prestigious charter if you want to be a professional investment manager. And the CFA Institute, in their latest curriculum, have included cryptocurrencies and blockchain as a part of the curriculum. So I think that is a huge endorsement, because if the CFA Institute is including it, then basically they're saying that this stuff is important. It's not a fad. It's not going away, and they want future investors who are going through the CFA curriculum to learn about them. So I think that is a huge endorsement.
That's certainly exciting, and I completely agree with you, how we're starting to get signals from some of these bigger institutions, and the signals have changed just even in the last 12 or 18 months, where they're not fully on board, but they're starting to sit back and say, well, crypto's here. We obviously know it's not going away. There is massive benefits to the blockchain technology, but also the cryptocurrencies and the blockchain are so intrinsically linked as well. So, I think you really can't dismiss one without dismissing both of them.
I agree with you on that. There's, it's interesting. There have been, there used to be a lot of statements about separating the blockchain from crypto. And you're right, they are interlinked together. And yeah, there might be some use cases where you could separate the two, but the way the incentive model and the security model is built, on the blockchain, it relies on crypto, or sort of that native currency of the protocol. So I think that the larger use cases of that we would see, coming out of the crypto space, if we were to go like 5 years in the future, would be the ones that integrate both cryptocurrencies and blockchain together, and use the full model, as opposed to trying to just separate the technology from the economic model.
Absolutely. No, exciting times ahead, is what I'll tell a lot of people too, is once you gain enough of an understanding of the current market and its maturity, you'll really know where we are and how much upside there is for this industry if you decide to get in. So Vishal, tell us a little bit about your role at Ethos as the Chief Investment Officer, what it's been like coming from a major corporate company like Blackrock into this new role. Tell us a little bit about that and what you've been doing at Ethos.
Sure. So it's been very exciting and very, very, very different for me compared to the roles, or I've So I worked at Morgan Stanley for several years, followed by Blackrock at several years. And I had a couple of other sort of jobs that were for smaller periods, but bulk of my career is these two large organizations. So compared to that, coming to Ethos, which is essentially a startup, and that too in a crypto space, has just been night and day. It's very different, and I'm very excited about it. I'm loving it. It's just it's a very creative space. It's a small, dynamic team. Everyone's really committed to the mission, and that's what like gets everyone out of bed. And we're excited, really excited about what we're doing here. So I'm really happy to be here. Um, what I like about another thing I guess I could say I like about the role is that it allows me to satisfy my interests both in on the investment side and engineering. So it brings investments and engineering together, which is sort of the two skill sets I have. So that was sort of another reason that I joined. What I specifically do, I am focused on a lot of investment research right now, which I publish some of it as blog posts, and we can talk about that in a little more detail. But the goal, I say I have a twofold goal. One is building a set of investment products and services that can be made available to just the broader community and to the entire globe where possible and where regulations allow. So to make diversified portfolios of crypto as an example, or diversification using crypto as well as traditional asset classes. How do you combine these things together into a product that can be made available to a user wherever they are globally? With a few clicks. Those are sort of the lines of products that I'm working on, which requires a combination of investment research and engineering. And then the other aspect of my role is investor education, just to sort of educate the broader community on how to be smart and rational and responsible about the risks you take when especially you are in the crypto space, because we all know there's tons of risk, right? So there's the opportunity of a lot of reward, but it also comes with a lot of risk, right? So how to be smart about it. That's sort of one of my other objectives, is to just educate the broader community in whichever way I can, so that people are just making smarter decisions in how they are deploying their assets.
And where do you think the crypto industry, in its maturation when compared to the traditional finance industry, and I know it's kind of night and day because traditional finances have been around for literally over hundreds of years, but in your opinion, how early are we in that educational side, in that rational investment side, in that having appropriate sets of both data and other kind of educational material to help people make smarter decisions? What's your kind of gauge on that?
I think we've made a fair amount of progress in the crypto space in the last sort of 3 or 4 years. And I will, I guess, as one sort of item that I can cite here is some of the charts I put together for a blog post I recently wrote. It's a post that's available on Medium, where I try to measure decentralization in cryptocurrencies, and what's an appropriate measure for measuring decentralization in cryptos is what that blog post is about. And while I was doing that research, what I noticed was, as an example, if you look at the leaderboard of cryptocurrencies at the end of 2013, so this is 4 years ago, right? At the end of 2013, if you were to look at the top 10 coins by market cap at that point and compare them with where they are, what their ranks are, there's only 3 of those 10 that are still among the top 10, right? So the 3 that are still among the top 10 are Bitcoin, Litecoin, and Ripple. Every other coin, there's coins like WorldCoin, MegaCoin, Namecoin. Many of these projects I don't know much about, but they're the ranks are like in the order of 600, 800. So they've fallen quite a bit. That's 2013 leaderboard. Similarly, you can look at the 2016 leaderboard, and you'll find a similar pattern. Not as severe, but the top 10 at the end of 2016 are actually quite different from the top 10 today, right? So what that's telling me when I look at that data is uh, the leaderboard is changing quite a bit, right? At the end of every year, and I kind of go through this year by year, when I was doing that study, any industry or any where this board is changing that rapidly, it's the data is telling you that there's still a lot of disruption happening within the space, right? There are new projects that are disrupting older projects, so you don't even have to disrupt traditional industries. This is a disruption where one crypto project is just disrupting another crypto project, and the leaderboard is constantly changing, right? Um, so that tells me that there is a lot that needs that the space needs a lot longer to mature, right? So I would say um, I can see some stabilization of the leaderboard. That's like one way of measuring the change. But I think there's still sort of a long way to go, a few years, a couple of years maybe, before things start stabilizing and we see like we start thinking of like the top 10 or the top 20 to be reasonably stable, right? And they will keep changing. I mean, that's sort of how innovation works. But at least you'll see some stability, where like not 70% of them are changing. It's more like 10 or 20% of the projects that keep going in and out of those top 10 or 20. That would be one way to measure it.
So this is probably a bit hard for you to answer, but have you noticed any patterns that emerge in maybe some of the cryptos that end up falling off, or essentially end up getting disrupted by the newer project?
I wouldn't say that's any specific patterns as such that I can I can allude to. The inferences that I made from an investment standpoint were more about if I'm an investor and I have to make some decisions in terms of how I commit my assets in this space. One thing I should take for one assumption that's a reasonable one to make in this space is that I should expect um, some of the projects to change over time. Some of them will gain market share, some of them will lose market share, and that should be incorporated into my investment strategy, right? So getting religious about one project versus another, and thinking that, oh, this is the project that's going to win, and sort of betting the farm on that one. I wouldn't recommend that to anybody. Don't feel like that's a good idea, because across the board, whichever project you look at, starting from Bitcoin, right, they've all sort of lost market share. They've all gained in value, right? Many of them, these successful projects have gained in value, but they've lost market share. If you look at Bitcoin as a share of the total cryptocurrency market cap. So what that tells me is a diversified portfolio and you could sort of diversify in very simple ways by just owning like a market cap weighted portfolio, or you could do your own research and invest in 8 or 10 projects that appeal to you. But either which way, what the data tells me is that having some diversification in the projects or tokens that you allocate money to is just a much smarter way to go about it. And that's probably going to be, if this disruption continues where you have newer projects disrupting older projects, then that would make more sense, as from an investment standpoint as well.
Yeah, and I think they're good points. And one thing that I tell people, and that I recently did an interview myself, was as this market becomes more and more saturated and there's more and more projects which are essentially speeding up. I mean, we have so many new projects coming out all the time. The selling point or the value proposition of we've got the best tech is going to be less and less important. It's becoming, I think, maybe some more traditional business management and company management, from what I have seen, is becoming more and more important, and really strong leadership behind companies in this space, as well as certainly some things I have seen behind some exciting projects.
I agree with that. I mean, I could add a few characteristics that would be interesting, right? Um, when I'm thinking about a project is you look at what problems the project is trying to solve, right? So scalability, we know, is a big problem in the crypto space currently, right? So everybody likes the idea of distributed ledgers and in decentralization, and all that's great, and we love it, but we're not being able to scale, right? So from a technology standpoint, the projects that succeed at cracking that nut will obviously do better than others. So that would be one problem sort of worth looking at. Like, is this project trying to solve the scalability problem in some shape or form? And then that might be a project worth following. Another one is interoperability. So, we have this space where, it's gone from a handful of projects, let's say at the end of 2016, to now, I don't know how many there are, 1,600, 2,000 different cryptocurrencies, that are trading out there. So there's obviously more projects than there are tokens. And so, it's mind-boggling, the number of projects. So it's not possible for anybody to sit down and research all of these projects and make educated decisions on which ones to invest in and all that, right? So projects that are solving for interoperability, I think, would be interesting. The ones that can make it easy for you to go from one blockchain to another, because if you cannot really bet on this, I don't think the future of this space is going to be where like one blockchain wins over every other blockchain. What you're going to get is a mesh of multiple blockchains, and some will be good at certain things. So these blockchains will specialize over time. Is sort of how I feel about this space. And so projects that would, another set of projects that I would look for are the ones that are making, that are allowing interoperability across these blockchains. But because from an investor standpoint or a user standpoint, you want, that's what you're looking for. You've got a real life problem that you're trying to solve. You don't really care which blockchain solves it. You just want that problem solved, right? That's how, a general, a layman would think about it. So projects that are offering interoperability would be a good one, and ones that are making it sort of easy to use, right? And bringing it home to the end user. And the end user here is not an engineer, right? The end user is like mom and pop, who've got a simple problem they're trying to solve, right? Like move money, for example. So for them, they don't care whether it's the blockchain or whatnot. What they care about is like, how much does it cost me to move money from point A to point B? That's what they're interested in, right? So and the ease of use and the focus on that is sort of one of the reasons that I got interested in Ethos as a project, because that's something that we're really focused on. Is like we want to improve that end investor experience significantly, so that encourages adoption of cryptocurrencies much broader than sort of the current crypto community.
Yeah, couldn't agree more. And that was one particular thing that really interested me personally about Ethos as well, was that focus on user experience. And it's something that when you abstract yourself out of the crypto space as someone that's been in this for a while, and you think from the perspective of someone that's never done this before. I mean, at the moment, there's just so many complexities. I mean, you're talking not only a whole new technology, but a whole new way of thinking about money as well. The more we can get rid of that complexity and just make it easy to use, and make it easy to use in a way that you actually have retention of that person within a platform as well, I think is going to be more and more important. And that's personally one of the things that's really exciting about Ethos. Now, what I'd love to get into, Vishal, is a bit more into your research. So a couple of things that you've looked into. You've looked into crypto correlations and measuring decentralization. Starting with the correlations, tell us a little bit about the methodology behind your research and what some of the outcomes or what some of the results that you found from doing that research.
Sure. So so correlations are sort of the bedrock of diversification, right? The idea there is that if you can find a set of assets and that are not perfectly correlated to each other, so they don't have to be negatively correlated, or the correlation doesn't even have to be zero. They just don't have to be perfectly correlated to each other. So if you get a perfect correlation and construct a portfolio of assets rather than allocating all your capital to one asset, you get higher portfolio efficiency. And one simple way to measure it, which is what I do in the post I wrote about this as well, is the return to risk ratio. So how much return are you getting per unit of risk? Is a simple way to measure the efficiency of your portfolio. So what I find there is that there is a fair number of, just looking at, in that particular post, I just looked at the top 10 or so cryptocurrencies, and I find that there's several candidates in there where the correlations are still pretty low. I would say the average correlation is around zero point 0.4, zero point 0.5. So that's 40 to 50% correlated, among these sort of top 10. And I deliberately chose top 10 because I wanted to make sure we were using cryptocurrencies that have enough history. So we have data to back our research. Although, I will put in a caveat that just all of crypto just has very limited amount of data as of now compared to traditional asset classes like stocks and bonds, decades and decades of data. When you're doing any sort of research in crypto, you've got 2, 3, 4 years worth of data to work with. But with what we had, what we find is these assets are not perfectly correlated. The average correlations are in that sort of 0.4, 0.5 range. So you can construct portfolios that just combine different cryptocurrencies, and you can get much better return per unit of risk that you take. As an example, I constructed a simple portfolio that was 50% Bitcoin and 50% Monero. And I chose those two coins because the correlations are low compared to some of the other correlations. And if you combine those two, what you find is that your return to risk ratio increases significantly. It's about 10% higher than Monero's return to risk ratio, and 30% higher than Bitcoin's standalone return to risk ratio, right? So you're seeing the benefit in terms of getting extra return for taking the same amount of risk. Another one where I did a comparison was just constructing a portfolio of Bitcoin and Litecoin, where those two cryptocurrencies, as you can imagine, have higher correlation because they're solving the same problem, right? It's payments, whereas Monero had a lower correlation with Bitcoin just because it's solving a different problem. It's financial privacy. With a Bitcoin Litecoin portfolio, again, you see some benefit, but it's not as significant as a combination of Bitcoin and Monero. So you get that from the data as well, from the lower correlations. But you can also think about as you're constructing portfolios, what is the problem that this project is trying to solve, right? And if there's 2 or 3 projects that are all trying to solve the same problem, then it's pretty much guaranteed that they will be highly correlated. Their prices will be highly correlated, right? So when you're putting together a portfolio of cryptocurrencies, you want to look for projects that are trying to solve different problems, right? And then combine them. That'll give you a more efficient portfolio. So that's what I show through the data as well. So that was sort of correlations within cryptocurrencies. And then I sort of extended that study and looked at correlations between cryptocurrencies and traditional asset classes. So what's the correlation between Bitcoin and stocks and bonds? And again, it's a similar conclusion where, and actually it's a lot more stark in the sense that all you need to do is allocate a small amount of your portfolio to cryptocurrencies. So in that test that I did on the blog post I shared, I allocate 5% of my portfolio to Bitcoin, and the rest of it is 95% is allocated to stocks and bonds or traditional asset classes, right? And the return to risk ratio of the portfolio that has 5% Bitcoin is twice as much as the return to risk ratio of a portfolio that was stocks and bonds alone, right? So basically what that's telling me is just by introducing a small allocation to cryptocurrencies, I can boost my return risk ratio or my portfolio efficiency significantly, right? So that's something for an investor that makes a ton of sense, or to me, it makes a ton of sense to. I'm allocating a small amount of my capital. It's 5% of the portfolio, at least in that study. So I'm not betting the farm on cryptocurrencies, which I wouldn't advise most people to do. And I'm still getting a significant improvement in my portfolio results and my portfolio performance. So there is a lot that can be gained by allocations, being smart about sort of allocations to cryptocurrencies to begin with, and then even within those, like finding a set of projects that are trying to solve different problems and combining them into a basket of currencies that you allocate to. So those would be sort of some of the findings from the research I did there.
Oh, very interesting. And what about the research into decentralization? I found that particularly fascinating, actually. And you've actually come up with kind of your own methodology and equations to actually measure the decentralization. Tell us a bit about that.
Yeah, sure. That was the measuring decentralization was an interesting exercise. So the measure that I used there, it's the Herfindahl score, so it's a measure that's used in traditional economics and finance quite a bit. And it's a fairly simple measure. It's essentially mathematically, it's the squared sum of market shares of all the participants in a system, right? So all I do is take the market share of each one of the cryptocurrencies, um, and sum up the squares of these market shares, and that gives you a combined score that can go all the way up to 100, right? So the way that score is designed, it sits between 0 and 100, um, and the higher the score, the more decentralized the system is. So the way this has been used in traditional economics is when they're looking for how competitive is a sector, or how monopolistic a sector is, right? So a lower the score is, then you know it's more of a monopoly, because one asset or one company is dominating that sector, and that's why the score is really low. As you get more and more competitors in that space, the score starts rising, and that's essentially sort of what you want. So when regulators or economists are looking at how healthy an economy is or a sector is, they're looking at how many competitors are in the space and how much market share they have. So the more the competitors, the less each one, market share of each one of the competitors, the healthier the economy. That's sort of the idea of the Herfindahl score. So I use it in my study, and I call it the decentralization score, and it's measuring the same idea. It's like, what is the sum of squared market shares of all the cryptocurrencies, and what I find there is that the decentralization score has been rising pretty monotonically over the last 5 or 6 years that I had data for. I had data um, going back to mid 2013. So since then, the decentralization score is rising, which means the market share of Bitcoin has been falling, which we're sort of aware of. This is a mathematical and a concise way of measuring it. And so is market share of other participants, right? So as newer participants are coming in, they're gaining market share. You expect this decentralization score to keep going up. So when I wrote this post, which was about a month or so ago, the decentralization score for the crypto space was a little over 80%. And like I said, the cap is 100%. That's sort of the max that you can go to. So just to give a point of comparison, if you compare world economies, so if I did the same Herfindahl score, decentralization score, using GDP from all the world economies, so I take the GDP of USA and the GDP of Australia and England and China and all that, and put them together as market shares of world GDP. The score that I get from world GDP, or the decentralization score I get from world GDP, is around in the 90s. So crypto is already in the 80s, right? So and it's risen very, very rapidly in like the last 3 or 4 years. So I would expect it to keep rising as new projects keep coming on board and gaining market share. And one of the notes I made is I'm waiting to see the day when the decentralization score in crypto exceeds the decentralization score in the world economy. So right now the world economy is ahead. It's in the 90s, whereas crypto is in the 80s. But the rate at which crypto is evolving, I won't be surprised that like in the next year or so, we're in the 90s already. So that's a measure that I'm pretty excited. We monitor it. We have it on, or we're looking to put it on our on the Ethos site as well, so we can share it with the broader community on a daily basis. But it's just a simple way of measuring how rapidly is the system evolving, or decentralizing is how I describe it. But it's measuring the evolution of crypto.
Well, it's truly fascinating work, Vishal. It's extremely interesting, guys. There's links down in the description to Vishal's blog post where you can go and actually read these in detail. I highly recommend you do, because it's extremely valuable and interesting information, and knowledge is power. So I definitely highly recommend going and checking those out. Now, Vishal, the next question, you probably kind of touched on it before, and that was what I wanted to know is your perspective based on the research you've done of the market in terms of maturity. And there's probably a lot of different ways to measure this, whether if that's you wanted to measure it based on the decentralization or not. Really interested in hearing your perspective on that.
Sure. So, in terms of maturity of the market, there's a few things that I'm very comfortable saying. One would be that crypto as an asset class is here to stay, and I'm not the only one saying this. The CFA Institute endorsed that as well, and there's several larger institutions, as we talked about a little bit earlier, who are sort of changing their stance in terms of how they think about crypto, right? So I think the broader crypto asset class is here to stay. So that's definitely a view that I endorse. From what I found in the decentralization study, the leaderboard, or the sort of the top projects by market cap, if you may, that keeps changing pretty rapidly still. So I expect a fair amount of disruption within crypto to happen as well. So that is another thing I would expect. I wouldn't recommend getting religious about any particular project, because this is a space where there is a lot of smart people and a lot of innovation going on, and I would sort of respect that. And as an investor, change my views when the market changes, or when I see a new innovation, a new project that comes along that just seems to be far superior than what we've seen in the past. So I would encourage people to keep their minds open. I think that's sort of what this space is about. So you're better off doing that compared to getting religious about any specific projects. The other thing that I would mention is one sign of maturity of any particular space would be the reduction in volatility of prices, right? So we know prices are very volatile, and that's an indication that traders are struggling to figure out what's the right price for any particular project, any particular token, right? So we all know the space is still highly speculative. The prices that are being sort of assigned to some of these projects are way beyond the amount of utility they're providing. So that's why that volatility continues to be so high. But I would expect, as the space matures, the volatility to come down. Again, this is not something that I expect will happen over the next few months, but that would be a sign of maturity to look for, as you would expect, or at least some of the projects, say Bitcoin as an example. If you look at Bitcoin's volatility 3 years ago versus Bitcoin's volatility today, you will see that it's gotten less volatile over time, because now there's more buy-in, and for every seller in Bitcoin, there is a buyer, or there are more buyers, and that who will come in and sort of hold up the price. So you'll continue to see drop in volatility, maybe not for the entire crypto asset class, but in some projects compared to others, and that is a sign of maturity of that particular project. So that's sort of another thing to look for. So those would be sort of some of the findings that help measure the maturity of the market.
Really interesting. And you mentioned utility before, and this flows into the next question, I think, quite well. We're starting to see, some clear demarcation in the different types of cryptocurrencies out there, or crypto commodities, or however way you want to, whatever terminology you want to use to break down different classifications, But one thing we're starting to see emerge is we're starting to see, these protocols with the tokens or the coins associated with them. We've got the tried and true cryptocurrencies, the Bitcoins, the Litecoin, the Dash. We've then got utility tokens as well, which are used within those decentralized applications. And now we're going to start to see more and more security tokens down the track, as well, as we start to see some more regulatory clarity around that. We've got companies out there like Polymath, which are gearing up ready for that industry, essentially. So what would be, based on your research, based on your experience, what classifications do you think are going to be maybe some of the winners, or have more upside potential in the years to come?
So I would say the ones that have been battle tested to an extent. The protocols, the currencies are the ones that, where I would be comfortable. So within sort of my crypto allocation, right, I would be comfortable allocating more to these projects because they're solving newer problems. When I think about utility tokens and the way they use a native cryptocurrency as a way to sort of gain access to that protocol or that service, right? It's really innovative, and that's sort of the innovation that Bitcoin brought along, and then others have sort of carried forward. But that's a very innovative and a very new way of raising capital compared to historical or sort of the traditional mechanisms of debt and equity or bonds and stocks, right, which we're all used to and have been around for hundreds of years. Um, so um, so uh, Projects that are doing that, where the token is highly integrated into the protocol itself and becomes like an sort of integral part of the ecosystem, are the ones that excite me most. Um, Security tokens, I'm not sure where exactly or how exactly they would play out, because they're sort of on this fringe of they're in the regulated space, and they're trying to use the blockchain to their best. So how different are they going to be in terms of the benefits they provide to end investors compared to just stocks? Is an interesting question, and I don't know what the answer to that is. So we'll see what kind of innovation comes out there. But I personally, wouldn't recommend a large allocation to security tokens at the moment, because you're sort of, you're playing with fire a little bit, because the regulations are not clear, and the benefits are not clear either. So that's sort of my personal take on security tokens at the moment. But I will be happy to change my view in 6 months' time once things are fleshed out a little bit, right? So it's a little too immature, that space, for me to form a clear view on it. Um, and then I guess the only other thing I would mention is just looking for projects that are trying to solve real problems. Where if you are in spaces where there is a lot of friction, there is a lot of intermediation, too many cuts being taken by intermediaries along the way, and the transfer of value is just inefficient. Those are areas, those are markets where I feel any projects that are looking to make a change there would be a lot more successful, a lot faster compared to more mature spaces where where you don't want solutions that are looking for problems, right? You want solutions that are solving real problems. So that's just sort of a logical way of looking at things. But I would recommend like asking yourself the questions like, what problem is this project trying to solve, and how real is that problem? Is it a big deal? Is it going to make a big difference if that problem is solved? So that's a question I ask myself before I invest in any particular cryptocurrency.
Yeah, that's really good, and that would reflect my own sentiment as well. I know one thing for sure is protocols at the moment, because they target so many industries, so there's such a high use case for it. At the moment, I see utility tokens as, if you're very well versed on the industry that particular application is going to disrupt, I think that's fantastic. But the thing I like about protocols at the moment, and especially in these early days, as we're seeing different protocols kind of work out their value proposition and what they have to offer, is so much can be built on them. So I think especially if I was a newer investor into cryptocurrencies, that would probably be something that I would point them towards, and the major cryptocurrencies as well, like Bitcoin, for their really, really high utility as well. Now,
yeah.
Before we finish up, Vishal, one of the last questions I have for you here, what's your opinion on the market at the moment, and where do you think it's going to go in the next 12 to 18 months, both from a maturity and regulatory perspective, but also a valuation as well?
Sure. So let's start with valuation, since that's more interesting. I think so. Here's a data point that I'll offer, right? If you think about the previous Bitcoin recession, if you may, that lasted a couple of years, right? So from like late 2013 to late 2015, roughly, let's say. So it took 2 years, right, before the price of Bitcoin started turning around, and then we saw the sort of the boom period in 2017, but the price was sort of gently appreciating in 2016 as well. So it took 2 years before sort of the market turned around. I think this time around it would be a lot faster than that. So if you're asking for what's my view over the next 12 to 18 months, I would say it's pretty bullish. And the reason I think it's going to be a lot faster than the 2 years it took last time around is actually quite simple. The reason is that there's a lot more capital that's available to the space now. There are a lot more projects. There are a lot more smart people who are working on this, right? When you have that, then you can expect that the innovation would come at a much faster rate. And so my expectation would be in sort of that sort of a period, 12 to 18 months, the market should turn around. So I'm pretty bullish in that sort of longer term. If you'd ask me what's going to happen in the next month or two, I have no idea, because that's too short a term. But a longer term, I'm quite bullish about it. From a regulatory standpoint, we talked about this already, so nothing new to add there. But just the stance of regulators pretty much across the board. There are a few exceptions here or there, but the general stance has become a lot more positive. There's a lot more talk about let's figure out crypto and figure out how to regulate it rather than dismissing it. And same we're hearing from large institutions. And then I mentioned CFA Institute already. So those are all very positive signs that you're getting sort of this sort of broader support coming from the traditional community, and that'll only accelerate the innovation and also I think the valuations in this space.
Oh, super interesting stuff. Vishal, thank you so much for your time. This has been an incredibly fascinating chat. So much value, so much really exciting stuff, especially from someone with your background and experience coming from that traditional space. They're the people I really like to talk to, and I know the audience gets so much value out of that as well, because you're really getting educated perspectives from both sides as well. So huge thanks from me for coming on board and giving us your time, giving us your insights and your experience. I know the audience will be stoked as well. I've told the audience they can find your blog posts down below. Is there any social media platforms? Is there anything you want to point them towards in terms of ethos development or anything else like that?
The couple of places that I would point you to is the Ethos website itself. That's where we put all our updates out. So as we build some of these products, so the Ethos Universal Wallet is out there already, and we're rolling it out pretty successfully globally. So we're stoked about that. The next set of releases that we have, you will find all the updates on the Ethos website. I regularly write and try to share like some of my insights from the research. Via blog posts. You will find these blog posts on the Ethos website, and then they're also on Medium. So if you just follow my Medium handle, you can basically read up any new research that I'm sharing. So those would be a couple of places to look for some of the investment work if you're interested in that.
Awesome. Thanks again. Well, guys, links down in the description. If you like this interview, you know what to do. Give us a like if you haven't subscribed. Make sure to hit the subscribe button. Go check out Ethos. Download the Universal Wallet. I've got it. I've done a tutorial on it. It's absolutely awesome. I highly recommend. So Vishal, thanks again. And guys, I'll catch you in the next one. Cheers.
Thank you so much. It was a pleasure.
Cheers.